Cool. All right. See what we got here. So this is TradingView. If you're new to trading, TradingView is the platform that you will use to chart and map out your trades. And then you'll actually execute the trades either on your phone or on your computer via your brokerage app. So you can have Robinhood, TD Ameritrade, Fidelity, just to name a few, E-Trade, to actually put in the buy orders. But this is just to visualize and look at charts to figure out which way to go. This is like your guide. All right, so let's go to economic calendar. We have a lot of earnings coming up as well. I'll show you that in just a second. All right, so this is the economic calendar for the US. You can see we have the USA. Make sure when you're looking at the calendar, it's on the USA. If you have it set on global, like if you have the entire world, it's going to show you literally everything in the entire world is happening. It's going to be way too much. But when you're looking at this, you can also hit this button right here for only the high importance. So what it will do is just trim down that list for you, because even this list pretty lengthy, right? This is Tuesday. Tuesday, look how many things are happening Tuesday. Way too much to pay attention to, and some of it is not even important. So what I like to do is just hit this button here and just focus on the main thing. So we have three major events. Three major events happening that are major, that could change the direction of the market. One being that Jerome Powell is speaking tomorrow. This is wrong week. Give me 1 second. I was like, wait a minute. There we go. All right. So we have some major events towards the end of the week. So we do have the GDP growth rate, and then we have durable goods. So all of this is pretty much telling us how the U.S. is doing as an economy, and these numbers can help the Feds gauge if we're going to get a rate cut or not. So that's been the whole talk throughout the beginning of the year: is, are we going to get a rate cut? We've had a lot of rate hikes, and we had a few rate pauses, but we haven't had any cuts. We were supposed to get cuts in March, and then it was June. Now it's looking like September. So if those inflation numbers continue to trend down, then we can be looking at a rate cut, which would be good for the market. But we haven't had one, so that's why this is a high importance. So GDP growth rate would be the one that I would pay attention to the most. And they both come out at 8:30. So 8:30 Eastern Standard is before the market opens. The stock market opens at 9:30 Eastern Standard. So you may see some volatility or some things happening to the market, before it opens, about an hour before it opens. So just pay attention to that. And if you're already in a trade, I know a lot of people in our Discord trade options. Just be careful around Wednesday. Like Wednesday, if you don't have a long dated option, like if you're in a trade Wednesday and it expires Friday, you may want to either take the loss or take profit, because you never know which way this information can go. It's literally a coin toss on how the market is going to react. So you have to be careful. And then Friday, we do have core PCE, personal income, and personal spending. So again, all of this is just pretty much telling the Feds how inflation is doing and if we should get a rate cut. So hopefully we get a rate cut before the end of the year. I'm thinking we could get a rate cut in September if the inflation numbers are good. But again, who knows? If I knew, I would be making some money off of the information, but I'm not sure at this time. So Thursday, Friday is what we need to pay attention to, and then throughout the week, Monday, Tuesday, Wednesday, it looks like it's going to be a pretty decent week. Let me see. Let me turn the high importance off. Let's see. We don't have got a few Fed speakers, but nothing too crazy. Okay, cool. This is a new button and setup for the calendar. So this is the earnings calendar. We have a lot of stocks that have earnings this week. So you can see Monday. Well, I don't want to go through all of this. I don't want to sort it out. But Monday, we do have a lot of stocks. I want to say Coca-Cola has earnings, a few banks, so on and so forth. Tuesday, we have UPS, Spotify, just to name a few. We have GM, So this week is going to be extremely heavy. You can see all of these companies are having earnings. So you got Google right here; they're having earnings on Tuesday. We got Tesla. Um, so if you're trading any of those stocks, just be careful. We got Capital One. Capital One is actually one that I've been watching, and we'll be looking at its chart later on. In-phase energy. So it's a lot of stocks this week that have earnings. And if you're new to trading, what does earnings mean? So every quarter, every publicly traded company has to report earnings. And when the earnings report is produced, the stock can either shoot up or go down. So normally, if the earnings report is green, if it comes out well, above expectations, the stock is going to move up. If it comes out under expectations, the stock is going to go down. That's normally how it works, but you have certain situations to where before the earnings are announced, the stock has been going up in anticipation of the earnings being, of the earnings being good, and then the stock sells off. So my rule of thumb normally is that if you're playing options, this is for my option people, just don't trade earnings. Don't try it. It's literally a gamble. Sometimes it may work, and sometimes it doesn't. And sometimes it may work and you still lose money. I've had earnings that I played in the past to where I'll put, I don't know, $150, $200 on an earnings play. It will actually do what I need it to do. And then once the next day opens up, I'll be down to like $98. Even though the earning, everything happened nice, but it's because the implied volatility and some other things that happen with the option contract that's just really, really wonky when it comes to earnings. So I wouldn't even touch it. If you're holding shares or buying shares, that's a different conversation. But trading options, always be careful around earnings and know the earnings date for the company that you trade. Do I have any questions on this? Again, this is just how to navigate the calendar, looking at economic data and earnings. Real simple stuff. I may not need that. Jimmy?
I know they had it. You were talking about the announcements, but does anything dealing with Biden dropping out have any, I guess, play in what's going to happen this week?
Yeah, so far, what I've been watching is energy and crypto. So lately, Trump has been endorsing crypto, and Biden, he was a big proponent of alternative energy sources, EVs, solar power energy, so on and so forth. So um, anytime it seems like Trump is winning the race, crypto is going to go up because Trump has said that he's in favor of crypto, and I actually think that Trump is speaking. I want to say Thursday at a crypto convention at a Bitcoin. I want to say it's called the Bitcoin convention. I have to get the article, but those are the two that I'm looking at. And then with Biden, since Biden stepped down, I'm thinking that we could see the energy sector as far as like renewable, energy going down, and we may see gas go up. So those are the things that I'm watching. The market hasn't fully opened yet, so I can't be 100. I can't be 100%. But I've been watching crypto since crypto is 24/7, and Bitcoin has been spiking. When the news came out, Bitcoin went from about 68, 67 to 68K all the way down to about 65. And then it shot right back up to 68. So it pulled back for like literally like 30 minutes and then shot right back up. Because again, Biden stepping down is good for crypto because that means, Trump has pretty much made a promise that if he wins, we'll get better crypto legislation. So that's what I'm seeing so far. Energy down, crypto up so far. Now, when it comes to tech, Microsoft, Nvidia, I'm not sure how those are going to be impacted just yet, but right now, so far, again, from what I can see, crypto and renewable energy sources are being affected. Does that answer your question, Jimmy?
Yes, thank you.
No problem. Any other questions? Cool. I'll take silence. That's a no. Up, Todd.
I have a question. So with earnings, if you're already holding a stock, um, is there anything you do before earnings with the stock? Like, do you think defensively and sell off some shares, or if you're confident about it, you just kind of hold? Like, how do you approach earnings when you already have a position?
Yeah, it depends on what you plan to do with the stock. So let's say if you're already in the stock and earnings are coming up, and let's say you plan on holding it for 2 years, right? So if you plan on holding it for 2 years, the earnings are coming. Um, what you can do is wait to see what happens with earnings. Like, you don't have to, shave profits before earnings, because you plan on holding it for 2 years, right? Or a year to 2 years, you plan on holding it. If the stock goes down, there's an opportunity to buy the dip based on why it went down, right? So what I normally do to prepare for earnings, if I'm heavy in a position, is I need to pay attention to that earnings report. I also need to pay attention to the earnings preview. A lot of companies will have an earnings preview, and analysts will report like, these are the numbers that the company needs to beat. This is what they had last quarter. This is what they had the quarter before. And then you can compare the numbers and see, if you think that they will beat it or not, especially depending on the season. So there's a little fundamental analysis and research that you can do, but I will also take into account how much in profit are you before before earnings happen. So if you're up 30-40% and earnings is coming up, do you want to risk it going down and you being up 10-15%, or do you just want to go ahead and shave profits just to be on the safe side? And even if you're wrong, let's say it goes up another 10%, at least you took profits and held it to the side. So risk management is going to be the thing to pay attention to when it comes to, do you sell or hold through earnings, and then also the time horizon.
Thank you.
No problem. Any other questions? These are great questions. All right, cool. I would take silence as a no. Keep going. All right. So normally we look at the SPY, the S&P 500, which I think is one of the best stocks, on the market. I think if you don't own any stocks, I think that the S&P, the SPY specifically could be, your beginner stock. Is a good bedrock stock. It doesn't move up or down too much. Like a 5 or 10% swing on the SPY is extremely good. Sometimes the SPY would just move 0.5%, 1% a day, so on and so forth. But we're not going to look at the SPY right now. We can look at it later. I want to look at Bitcoin. The reason why I want to look at Bitcoin is because, again, we just talked about how with Biden just getting, stepping down from the race for president, how it's going to impact the different markets, also the different sectors. So let's look at Bitcoin. All right. If this is your first time looking at my chart, I know it looks a little crazy, but we're going to go through each and every part of this chart and isolation, and just make sure you understand how each one works. So if you have any questions, just let me know. But right now, what we're looking at is the chart for Bitcoin. These are my different indicators. Again, I'm going to go through each and every one. And if you have any questions, please stop me and let me know. All right. First indicator at the top in the purple, and each indicator, the label is going to be at the top left-hand corner. So if you want to know what you're looking at, top left-hand corner is going to tell you. Here, top left-hand corner, top left-hand corner, top left-hand corner. And you may not need all of these indicators, depending on your style of trade, or you may just want to add them on as you understand it. I don't want a information overload happening, and then you have analysis paralysis, and you can't make a decision on when to get in, when to get out, so on and so forth. All right, let's focus on this indicator only. All right, so this is the RSI. Well, first, we're looking at the weekly time frame. Let me walk it back. So the stock there, the asset that we're looking at is Bitcoin. Bitcoin is interrelated to the stock market because you have Coinbase, you have companies that allow people to buy and sell crypto that are listed on the public or that are traded on the public stock market. So Bitcoin is still connected to the stock market. So that's why I like to pay attention to it, because I also trade Bitcoin related stocks. All right. So this is the RSI. The RSI stands for Relative Strength Index. This is just basically telling you if a stock is hot or cold, right? If a stock is overbought or underbought. So when you're looking at this RSI, it's going to give you this number in purple. Some of you all may see a number in yellow. You don't have to pay attention to the yellow. I actually took it off my RSI. You can leave it on if you want to, but the purple number is the number you want to pay attention to. And the purple number is going to pretty much tell you if the stock is hot or cold. If the stock is hot, if it's too hot, you don't want to touch it and you want to let it cool off. The reason why is because if it's up too high, there's no money to be made for you, and you're running a high risk of it pulling back. Right. So we don't want to get stuck in a stock and hold it while it's going down. Right. If it's a falling knife, you just let that falling knife drop to the floor and you pick it up. So the way that you know a stock is hot is if the stock is in this area around 70. So 65 to 70 would mean that the stock is getting hot. Now you can see this is Bitcoin. Bitcoin has blown way past 70 before. This can happen, but once you're above that 70 range, now you're running a risk of it pulling back. And the higher it goes, the more likely it is to pull back. So you can see at one point we're at 83, and then at another point we're at 88. So if you ever look at a chart for a stock and the RSI is 65 and higher, you may not want to trade it. And if you do trade it, just know you're running the risk of it pulling back. So right now we're looking at Bitcoin is not quite at 65. So there still could be some room for it to go from 60 up to 70 on this weekly chart. And that could be some, that's money in the bank. That's money that could be made once it hits 70. Once it hits 70, then you have to decide, do I want to continue to hold and run the risk of it pulling back? Or do I think it's going to overclock and go up to 75, 80, so on and so forth? But that's if the stock is hot. Now, on the other side, this chart is also going to tell you if the stock is cold. So again, 65 to 70, when you look at this purple number, is going to be hot. That's what you don't want to buy. Because if it's too hot, there's no money to be made. Or you may just eke out 10, 15% profit. Now, if that's what you want, cool. But you want to be careful when that's happening. Now, when you look at this middle line is 50, right? So 50, this middle line and this bottom line has a range between the bottom is 30, the middle is 50, right? So this area down here, if the stock is in this area, the stock is cold or it's starting to cool off. Honestly, you want your RSI, you want this purple number between 45 and 55, and you want it pointing up like this. 45 to 55 while it's pointing up like this will give you the best opportunity to let the RSI run up to about 65, 70. You can take profit and get out. Now, is that going to happen every time? No, but that's ideally what you want to see. And there are so many stocks on the market that if you look at a stock, let's say if you look at your favorite stock and your favorite stock is, I don't know, Apple, and Apple's RSI is at 65. You don't have to trade it. What you can do is just wait until Apple's RSI cools off, comes back down below whatever range you're targeting. Again, I like 45 to 55. So once it cools off, it starts to point up, I'll go ahead and hop in that trade. But that's what you want. So again, 45 to 55 on the RSI pointing up, that's a thumbs up. Now, sometimes you're going to see an RSI that happens like this. So the RSI, just like it can overclock above 70, it can also go below this line. You can see the RSI at one point was at 25. Now, you can buy a 25 RSI. The only thing about buying low RSIs is that if you buy a low RSI, you may have to wait longer for it to recover, right? So like if you would have bought Bitcoin when the RSI was down here at 25, 26, you see that it went up a little bit and then it came down again and then it went up and it's kind of stagnating before it actually takes back off and goes for a run all the way up to 83. So this is a long time to hold the asset, right? The stock. So it was at, this is what, June 13th. It was down here at 26. And then in December, so from June to December, you got a few months in between that you would have been holding if you held all the way up until it got to 82. Right. So buying a low RSI, again, you just may have to hold it longer. which a lot of people like. But if you want to just, let's say you just want to swing trade, and swing trade is buying something low, selling high. You want it to already have a little bit of momentum. That's where that 45 to 55 is going to come in at. The stock is kind of already moving. You just want to hop on the train, take the ride up, take profit, hop off, go to the next stock. But that's the RSI. Do I have any questions? Okay, cool. All right, let's keep it moving. All right, let's look at the body of the chart. This is the main chart. Now, again, we're looking at the weekly chart. So, and you can change this to, you can change it to ticks, you can change it to seconds, so on and so forth, minutes, hours, days, months, weeks, they have all of them. But what this means is that every time you adjust this, so we're looking at the 1 week, that means every single candle, regardless of the size, it can be large, small, almost invisible, it represents the price movement for 1 week. So if we look at this green candle right here, this is the stock started, or I keep saying the stock because I'm used to talking stocks since we're looking at Bitcoin, but y'all get what I'm saying. The asset started at 51,000. And at the end of the week, it was at 62. So this is showing the price movement for 1 week. Now, if I switch this to 1 day, it looks a little different, but each candle represents what? The price movement for 1 day. So if I go back to 1 week, these candles represent the price movement for 1 week. All right, with that being said, just make sure you know how these candles work. They look a little confusing at first, but they're really simple. When you're looking at a green candle, it starts at the bottom. So it starts its day at the bottom and it closes at the top because it's showing you that the asset went up in value. So it's showing that it started here at 51 and throughout the week, it built its way up. And at the end of the week, it closed here at 62, 63. And so when you're looking at a red candle, it is doing the opposite. The red candle is showing that the asset is going down. So you look at it here, it starts its day at the top and it moves down. So this red candle started at 62 and it built its way down to 55. So red is going to be down, green is up. Just remember that. It's real simple. And again, since we're looking at the week, this is the price fluctuation on the week. Do I have any questions so far? I know this is extremely simple. Cool. All right. Now, let's talk about the different things. I know you see a lot on my chart. Let me actually hide some of this. Hide that one for a second. All right. These red and orange and yellow lines. Let's talk about those. All right, so this is the MA ribbon. The MA ribbon stands for moving average ribbon. A moving average is just basically the average stock price over any given time period. So when you see that I have a 20, 50, 100, and 200, these are the weeks. These are the units that you're going to be focused on. So this is 20 weeks, 50 weeks, 100 weeks, 200 weeks. So if I change this to a day, right? If I switch this back over to a day chart, that is 20 days, 50 days, 100 days, 200 days, right? So anytime you change this, so even if I change it down to 1 minute, that is 20 minutes, 50 minutes, 100 minutes, 200 minutes, right? And again, so the MA ribbon is a ribbon of moving averages. The thing about moving averages is that you want to know what position they're in relation to each other. It's real easy to pay attention to because with the setup that I'm using here, you only have to pay attention to one. And that's the 20 MA, this one, the yellow line. So if the yellow line is above all of the other lines, 50, 100, and 200, that means that the asset, the candles are going to want to bounce off of the 20 line, right? So, and you want them in chronological order. That's another thing. You want 20, 50, 100, and 200 all stacked on top of each other. Right now, you can see, let me bring it back up. Again, it looks a little complex, but it's really simple. If I bring the colors here, you can see yellow is here on top, orange second place, burnt orange, third place, blood red. Actually, these two are flipped. Let me give you a better example. Look at, let me show you the SPY. All right, this one is extremely easier to pay attention to. Okay, look at it again. Yellow, 20 is on top, orange, 50 is right here, 100 here, 200 there. So anytime you have your moving averages in chronological order like this, 20, 50, 100, 200, the 20 is the only one to pay attention to, and the 20 is going to be where the stock wants to bounce off. You can see in this area, we just recently, what is this, back in April? Yeah, back in April, we just had the stock was running up. And then once it sold off, it came into contact with this yellow line, the 20, and then it bounced right off and went on a crazy run, right? So using this setup, again, if you have 20, 50, 100, and 200 in this order, that's why I say if you're new, trading the stock is probably, I said trading the stock, trading the SPY is probably going to be the easiest because you can easily see how these moving averages are stacked up. And there's not a lot of crisscross, a lot of tangled moving averages happening. But yeah, so when you have them in this order, that 20 is the only thing to pay attention to. So just follow the goal line. Do I have any questions about the MA ribbon? And if you're new, again, it may take a little bit of time to get used to looking at for moving averages. But again, it's extremely helpful when you need to know, okay, where is my 20 in regards to my other moving averages? And if 20 is on top, I can count on 20 as a bounce point. And if if the stock pulls back and it touches that 20, I know, okay, let me give it about a day or so. I can go ahead and buy. It's going to bounce off that 20 and I can make profits to the upside. Do I have any questions so far? And I'll make this even simpler. Okay, cool. Now, if looking at these four is too complex for you, you can just look at two. You can uncheck the boxes. So these were checked, you can uncheck them. And the only two you will need to pay attention to is the 20 and 50. If you look at it, it's only two lines to pay attention to throughout the whole chart. So it's real clean, real simple. The 20 and the 50, same rules apply. You want that 20 above that 50. And if the 20 is above the 50, then you're in a good shape. Normally the 20 is going to be above the 50 because they're going to be moving with the candles the most because they're the shorter, they have the shortest amount of time added into the moving averages. But 20 and 50 are the two ones you want to pay attention to. And another trick is that if your 20 goes underneath your 50, then the stock is probably going to go down for a second. And then when that 20 comes back to cross over and go above that 50 to get back in the right order, the stock is going to want to go up, right? So this is something to watch. If you're looking at a stock and you see your 20 MA go underneath that 50, you may need to go ahead, take profit, or move to another stock, or just hold your cash until it starts to get close back to another crossover to the upside where you got the 20 taking over the 50, and then you can see the stock went back on a run. So these two moving averages crossing over can give you an opportunity to buy and then also a signal to sell. Do I have any questions? All right, perfect. So let me turn my 4 back on. And well, while we're here, let's talk about support and resistance. Now, a lot of people always ask me, well, how do I know when to sell a stock? Or how do I know when to buy into a stock? Normally, you're going to buy and sell based on your support and resistant lines. So these blue lines that I have that are listed or that are printed on this chart, I put these lines because these lines are good to show me where the support and resistance is at. So a support and resistant line is basically, they're drawn the same way. And one is just above the stock price, the other is going to be below. So if I zoom in some, we can see we have a lot of lines below. So any line that I have on my chart that's below the current stock price is going to be my support line. Think about your table supporting your monitor or your computer or your laptop, so on and so forth. You need a support line because you need to find the recent or Yeah, the recent ground for the stock. So when the stock pulls back, it's not just gonna drop out the sky, right? This stock is currently at 548 or 549. Is it just gonna drop from 548 down to zero? No. That's so for my newer people, that's one of the biggest fears is that I'm going to jump in the stock at $500 and then it's going to go all the way down to zero. That's not going to happen. There's going to be a lot of checkpoints before it hits zero. Honestly, the SPY is probably never going to hit zero. But how do you know where to place these lines? So you put these lines where the stock has bounced or checked at least 3 times. Now with the SPY has been moving at a crazy pace, and now it's at all-time highs. If you've been watching like the news or paying attention to stock related news, almost every week they're saying that, oh, the SPY has reached a new all-time high, and that this is what it looks like. So we don't have 3 points to put we don't have 3 bounce points to put our lines at, because this stock is moving so fast up that we only get maybe 1 or 2 bounce points. So we zoom in, you can see that I put my lines where we have red in the midst of green. So we have green, we have these green candles where the stock was going up, and then it hit this price point at about 530. And at 530, you can see that we got 2 red candles for a cool off. So it started to consolidate and trade sideways, right? So we got 4 weeks of strong movement. Boom, we hit 530, and it kind of just sat there for about 2 or 3 weeks. And then it started to move again. We got 3 weeks. Boom, we hit 545, and guess what? We got another red candle. We kind of sat there for a second, and then it pulled off and went up to about 560, to where it rejected really hard. It hit about 560, 561, and then pulled all the way back down to 548, to where we are today. So you could put another line up in this area around 560, 561 as resistance. Again, support underneath the stock, that's going to be your floor. Resistance is going to be your ceiling. So let's look at this area of the chart. This was a floor for a second. We put 471 as a floor, and then we had a ceiling of 530. So this is going to give you your trading range. This is going to give you your realistic range of where the stock can go before it pretty much maxes out and needs to cool off. So we can see that the stock was here. And then you can have multiple support and resistance in between stocks. I'm sorry, in between candles, depending on where you chart the stock at. So we're looking at the weekly. If we move to the day, it looks a little bit different, right? So we can count on the day now, right? So again, to place these lines, you need 3 points to where it goes up and rejects. So let's look at this line here. The stock was down here. I can even place one here. The stock was here at 499. It bounced. It went up. Boom. It hit that 530. So this is on the daily. So it's showing you how many days it sat here. So it hit 530. And if I zoom in even more, you can see that it sat here 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days it sat here at 530 before giving up. And guess what? It got caught right by that 20. Again, I said if you're watching the 20 and the 20 is above all of the other moving averages, just like it is, you got it stacked 20, 50, 100, 200. It hit against that moving average and then bounced off and eventually broke through and kept moving up. So it went up, it hit this line. So this is a good place to put this line, because again, you need 3 rejections. So we went up green, it hit it. We rejected 1 time on this red candle, right? And then we went up green again on 3 candles. Boom, it rejected again twice. Then it just had a complete blowout here from 532 all the way down to 526 in 1 day. We got another green candle for another try. What did we get? Another red. So that's 3 red tries in a row. It couldn't break, and it just gave up, came all the way back down to 522. It got caught by that 20-day moving average, and then it pulled it back up for another test where it finally broke through. Same thing is happening here. Stock was moving up. Boom, hit this price at 545, and you can see how many red candles and how many rejections we have before the stock finally just thrusted itself through and then just continued to trend up. We can also put one right here as well. So again, this is going to help you identify situations to where this is where I need to get in or add more, and this is where I need to get out. So these blue lines are going to be the places to where, okay, for instance, stock is currently at 548. If it pulls down some more, it has some heavy support right here at 545. How do we know? If we look back to the left, we can see that on the way up, the stock got stuck right here. It had problems right here at 545 before eventually breaking through. So that means that if it's coming down, we could get a bounce point right here at 545 if it comes into contact with it. All right. So that's the way that you're going to look at these lines, these blue lines that you're going to set yourself. And if you have any questions, again, you can let me know. But you know, it may take some time to get these lines like committed to memory, but it's extremely easy to set them if you just pay attention to the candles. And I would start on the daily. It's easier to count the candles on the daily than it is on the weekly, because the weekly, you know, one candle represents a week. So that's 5 days within one candle, which is kind of hard to gauge and get a feel for support and resistance. So looking at the weekly is cleaner, it's easier to look at, and I think you'll get a better understanding of it that way. Do I have any questions? Perfect. Take silence as a thumbs up. All right. Let's go back to Bitcoin. All right, and you can see I have my lines here. So I have 2 lines here for the support. This is the floor. So you can see the stock was, or the asset was up here at 71K at one point in time, came all the way down, but guess what? It bounced right here in this area, and then it moved back up. Right now is at about 68K. You can also see back here, stock was going down, boom, touched it, bounced right off of this same line, right? So that's why I placed this here. We have way more than 3 just in this area, but it also checked in here, and it looked like we had some stutter stepping happening in here before the stock moved up. All right, let's move on to our next indicator. So again, well, I'll come back to the VRVP. That one's a little complex. Okay, let's move to the next one. This is the MACD. The MACD, this was a trend indicator. So if someone is saying, hey, is the stock in an uptrend or a downtrend, or they may say it's a stock in a buy trend or a sell trend, the MACD is one of those indicators that can help you identify if it's in a buy trend or sell trend. The MACD stands for moving average convergence divergence. We just call it the MACD, but really it's real simple. It's basically just displaying the relationship between buying and selling pressure. When you're looking at this chart, you have a red line and a blue line. And then you also have this chart behind it, but they both represent the same thing. So the red line and the blue line, when we're looking at it, you know, of course, throughout the graph, it represents buying and selling pressure. So the red line, if it's on top on the right-hand side, so in this area, if you have red on top of blue, that means that selling pressure is being applied and the stock is going to go down, right? So you can see in this area, we have red. The selling pressure is on top. So selling pressure is dominant, and selling pressure is the pressure that's being applied to the stock, in this case, to the crypto, and it's pushing it down because the selling pressure is up. That means that people are selling until the buying pressure, which is this blue line, crosses over, and now it's on top. So when red is on top, it is going down. When blue is on top, that means the pressure to buy is being applied to the crypto or stock. And we can see that we have blue now being on top of red, and it's actually pushing the crypto up. So if we look at the chart itself, you can see all of this green that we have. That came from switching from selling pressure. So again, remember, we had red on top for a second. Let me see if I can zoom out. Yeah. So down here, you can see we have red on top. You look up here, you can see it was selling off. Boom. It hit this point. It started to gather itself. And then green started to take off. So you can see right in this area, right before the takeoff, what happened. We had the green line. We had the blue line take over the red line, right? So in this area right here where blue is on top of red, that's pushing the crypto, or if you're looking at a stock, that's pushing the stock to the upside. So again, the MACD is just a way to confirm what's happening, because sometimes you may have a stock that's going down, but it's still in the buy trend, or you may have a stock that's going up and it's still in the sell trend. So this way you can confirm, okay, are people buying or selling this? And you can just look at the MACD and get a gauge for the pressure that's being applied to the asset. Now, the chart behind it, we have this red, red and green. This is the histogram, which if people have a hard time paying attention to the lines and seeing like how they cross, or if they're, if they're on top of each other, because sometimes like you can look in this area and it's kind of hard to tell. It's kind of hard to tell, especially if you're trying to eyeball it. But if you look here, you can see, okay, if it's red, that means that the selling pressure is being applied. If it's green, that means that the buying pressure is being applied. It's real easy to see. Then you can see it's green here, blue is on top, and then when red is on top, it is red on the histogram. Real easy to pay attention to. And so that's the MACD. Again, real simple to use. It's just telling you if it's in a buy trend or a sell trend. Let me see, is there any, oh yeah. So another special thing about the MACD is that when these two lines are getting ready to cross over, that's called a MACD crossover, which it can print a nice size candle to either side. So for instance, if we're in the downtrend to where the asset is just selling off, everybody has been selling this for, I don't know, a month, and then you see that this blue line is getting close to the red line and they actually cross. When that blue line crosses that red line to set us in a buy trend, it's going to give us a nice size green candle to get us started in the opposite direction, right? So if we've been selling off down, we're going to get a nice green candle that pushes us up, and then we're going to continue to trend to the upside like this. You can see in this area, we came from up around 70 to 71K, came all the way down, boom, we hit in this area, we kind of hung around for a little bit, and then we got a nice size candle that was breaking us out. We got another nice size candle, and then we got an extremely large candle here that kept us in that uptrend. So 3 green candles in a row pulled us out of the dungeon. We had a cool off period here with the moving averages, and then boom, we're bouncing back up. So right now I'm seeing I'm seeing Bitcoin hit this level here. So Bitcoin is at 68K. We could see it hit 70. And then after it hits 70, I'm looking at 71 to 72K. If it breaks 71 to 72, we could be looking at all-time highs around 74, 75K. Also, it's forming a bull flag. For my people who chart patterns, this is an extremely large bull flag, right? So a bull flag, it would have started down here. And a bull flag, for my newer people, it's just a strong move up. The stock will consolidate out to the side like a flag. Just think about a flag, right? This is the flag pole, strong move up. This is the flag waving out. And then the next thing you'll want to see is a break at this level on the top side to where it kept rejecting. And once it breaks to the top side, it's going to make a move that's equal to this move here. So this long move from, we can count it right here at about 42 to 72. So a 30K move, we can see that if it breaks here, it can also make a 30K move to the upside. So I was just talking to someone on Instagram. They were asking me about Bitcoin, and honestly, I think we could see Bitcoin at 100K sometime next year. It could happen at the end of this year. It all depends on what happens as far as crypto legislation and the laws. But I'm pretty sure we're going to see Bitcoin at 100K. I would say mid to late next year. But that means that this flag would have played out. So this is how you set your support, resistance, and this is how you gauge on where do I sell, where do I buy. So for now, we're going up against this 70K line. If you are already in, once it hits 70K, you have an option. Do I sell at 70K and take profit? Because once it hits the 70K, it's going to slow down. Right now, it's moving crazy. But as soon as it hits 70K, it's going to slow down for a second, and then it's going to continue to make its move higher. But at 70K, we're probably going to get some consolidation, maybe even a slight pullback before moving and testing all-time highs at about 73, 74K. Do I have any questions? Cool. All right. Last thing, stochastics, and then we'll look at the VRVP, because the VRVP is really helpful, but it is optional. The stochastics is optional as well. If you're starting out, the things that I would say is a must-have, you need an RSI, you need your MA ribbon, and then you need the MACD. Those are the good places to start. If you only want to start with 3 indicators, RSI, MA ribbon, MACD. The stock RSI is definitely good to have, but if it's a, if it's an information overload, you can hold off on it. And then the VRVP, a little complex, but is really a cheat code if you know how to use it and utilize it the right way. All right, stock RSI. This is the stock RSI. The stock RSI is going to tell you, it's basically a momentum indicator. It tells you how much strength or energy the move that you're looking at can have to either side. So this RSI is going to move from 0 to 100. Now, once it hits 100, it can kind of sit at 100 for a second, but normally once it hits 100, it's going to want to pull back and go back down to 0. Well, how do I know? If I scrunch this up, we can see this line. I can put a line right here. This blue line is 100, right? Look how many times it hit 100. And then it comes all the way back down to this area. This blue line is 0. So it likes to hit 100 and 0 a lot. The way that you use it, again, this one is real simple when you know how to use it. The way that you use this one is that once it hits 100, if you're already in it, you just need to be careful to see how long it's going to stay at 100. And if it pulls back, is it going to pull all the way back down to 0? Sometimes this can pull back. You can see that we just had a pullback. It hit 100, pulled back to like 92, went right back up to 100. So it can pull back again and hit this line right here, 80, and then go back up to 100. So you have to be real careful with this one because it is really sensitive. A slight pullback can send this all the way back down to 50, which is actually good. So it's going to be, I'll have some better examples as we, go out through the throughout the session, and I show you my picks, like the stocks that I'm looking at trading for the week and the stocks that I'm looking at investing in, long or short term. I'll show you the RSI of the stock RSI on those. You'll get a better example to reinforce how this is telling you about the, what it is telling you about the momentum. But again, this is just pretty much telling you that if this is low, like if you look at a stock, and let me look at the SPY real quick. Let's see if we have a good example. Yep, perfect. All right, SPY. The stochastics is at literally 0, flat line at 0. It may sit down here for a second, but the next thing you know, this is going to pop back up again. So the SPY has been selling off. Remember, it was just at 562, 563, came all the way down to 548. The stochastic has pulled all the way back down to 0. This is telling us that if the SPY starts to move back up, right? So if it starts to move back up to the 560 range that it was just at, it has a lot of space and momentum on the stochastics. This is pretty much telling you how much gas you have in the car to get to your next destination. So right now we got a full tank because this is at 0. Once this bounces back up and once it goes all the way back up to 100, cool. We hit 100, we're out of gas. We need to reset, put more gas in our tank, get it back down to 0 and shoot it back up. So just think about it as a cold spring that's bottled up right now while it's at 0. And then when it starts to move up towards 100, that spring is unloading and stretching out. So that's how the stochastic works. Again, you don't have to use it, but if you can use it, it's extremely helpful and it's easy to read. You can see we were just here at 0. What is this? Back in April. A good time to buy. Boom. Shot all the way up to 71. Cooled off a little bit. Came down to 60. Pushed all the way up to 100. Sat at 100 for a second and then came back down. So that is the stochastics. All right. And let's look at the VRVP. And you can pick any indicator that you like and you want to use and that you understand. You don't have to use all of these. Again, you can pick whichever ones you like, but I think that you need the MA ribbon, the RSI, and at least the MACD. And then you can figure out how to customize and add your own indicators. But these are great indicators to me as far as swing trading. Now, this is the VRVP on the right-hand side. The VRVP is basically going to tell you where the buys and sells are, right? So what I mean by that is the VRVP stands for visible range volume profile. So if you look at this area on my screen, I'll hover over the name for you, visible range volume profile. So that means that whatever is in this window is going to give you the volume for it on this side. And what does that mean? The volume is basically how many people are buying versus how many people are selling, right? So if we look in this area, you can see we have up, down, and total. Up is how many buy orders we have, how many people are buying, how much buying volume we have at that level. Down is how much selling we're having, how much sell volume we have. The total is just a combination of the two. So if you're looking at this level that we're on, we have way more up volume than we have down. So there's an opportunity for this to hit a ground and then pop back up, right? So this has been selling off for 3 days, in a deep sell-off for 3 days. And right now it looks like it's sitting at a point to where it could bounce. Reason why I'm saying it could bounce is because on the way up, it tested this area at about 548, 549, rejected, tested it again, rejected, and then it finally broke through. So on the way down, it's going to have a hard time breaking there as well. So this being at 548, 549, sitting right on top of this line, if it breaks through, boom, it's going to fall down to about 545. And then if we look at this area, so if you want to check your VRVP, you just hover over this node. On this area for the VRVP, if you look over here, we got 36 up and 25 down. So it's way more buys. People are literally waiting to buy the SPY right here. This is a large amount of people waiting. Now, is it going to get there? Who knows? Again, with Biden stepping down, I don't know how that's going to impact the SPY. But only thing I know is that looking at the VRVP is telling us there's a lot of people waiting literally right here at 545 to buy this. So this is how you use the VRVP. Again, it's going to tell you where the buys and sales are happening at, and then you can plot your trade around where people are buying and where people are selling. And you can figure out if you need to buy or sell based on reading the VRVP. Again, it's a little complex, but the more you get into trading, the more you get into swing trades, this is going to become your best friend. I always use it. I even use it on lower time frames when I'm day trading, when I'm scalping. I still like to see where people are buying and where people are selling so I can know where to sell and where to buy. Any questions? Great. All right, cool. So that's all that I have for the indicators. I'm going to pass it over to Mark so he can cover the pattern of the week. And then once he sends it back over to me, I will cover my stock picks for the week, all the stocks that I'm looking at, trading, investing, so on and so forth. But yeah, I'll go ahead and pass it over to Mark.
Appreciate it. And then don't forget to post those links for him that you said at the beginning. Give me 1 second to share my screen. All right. So this week I won't go over a pattern. I'm just going to elaborate more on the candlesticks because I do think when you're trading, the candlesticks are the most important thing when you're trading because they help you read and gauge where the price is at. So I just wanted to go over the candlesticks. All right. So with the candlesticks, they're basically going to let you know the price movement of a stock. They form in 2 different ways on most trading platforms. You'll see a red candlestick and a green candlestick. The red candlestick, like Darius mentioned, is going to tell you that the price is going down, and the green candlestick is going to tell you that the price is going up. But how and but why do they say that? And I'll show you examples of how you can read them. So each candlestick has an opening price, and depending on if it's a red candlestick or a green candlestick, the opening price is going to change. So for red candlesticks, the opening price starts at the very top of the body of the candlestick. So it starts right up here. And for green candlesticks, the opening price is going to start at the bottom. And this opening price is just what it sounds like. It's where the stock price opened up during that time frame. So if you're looking at the 1 minute chart, is where this candlestick opened during that 1 minute time frame. If you're looking at the daily chart, is where that opening price or where the stock price opened up on that daily time frame. So that's what it's going to give you, and you can use these. I have a question.
No, that's me posting the link.
Oh, okay. I'm sorry. And you can so these opening and closing price, if you was to, you can use these to correlate on the right corner of your screen the price, and I'll show you an example of how you can do this as well. So that's for the opening price. So every candlestick has an opening price. If it's a red candlestick, it's the opening price is going to be at the top, and if it's a green candlestick, the opening price is going to be at the bottom. All right. And then the next thing that you can read is the closing price. So for the red candlestick, closing price is going to be at the bottom. And then for the green candlestick, the closing price is going to be at the top. And the closing price is just the last price before that candlestick closed that the stock price hit. So, and again, it's going to create this body that you'll see here. And because the closing price on the red candlestick is at the bottom, it's showing you that the price was decreasing in value, right? So remember, red candlesticks, the price opened at the top, and you can see that as it's going down, it's closing at the bottom. So it's decreasing in value. So that's why it's a red candlestick, and that's why you can determine that the stock price is decreasing. And the green candlestick, the opening price starts at the bottom, but the closing price starts at the top. So that's showing us that the price is increasing, and that's why it's a green candlestick, and that's why it's signifying that the price is going up in value. And then when you put those two prices together, you'll have the body. So the body of the candlestick is basically going to be the color of the candlestick. So sometimes you have these wicks, but the body is going to be all of this that's filled in red. It's going to be all the prices that the stock price has touched in between the opening and closing prices. Any questions so far? Perfect, perfect. All right. So now we have the wicks. So you may hear people talk about the wicks if the price, they use these a lot for resistance and support lines. But these wicks that you see here is basically just going to be the it's going to be the range that the stock price has went to that didn't fall in between the opening and closing prices. So it's going to be all the prices that fall outside of the opening and closing prices. And it creates this wick that you see here, this little black line, these black lines that you see here. All right. And then you have the price high and the price lows. For either candlestick, they're going to always, the price high is going to always be at the top, and the price low is going to be always at the bottom. This is just signifying the lowest price and the highest price that the stock price has got to. Sometimes if there's no wick, then that means the opening and the closing price is going to basically be the price high and the price low. But you'll always be able to determine what's the highest price or the lowest price the stock has gotten to if you can just go. If you have a wick, it'll be at the very top of the wick. If there's no wick, it'll be at the very top of the body of these candlesticks. All right. Any questions so far? Again, it's relatively easy and simple. I just thought I'll go over it. All right, perfect. So let's go over a live example of how it'll look. We'll do a replay. We'll go do this. All right, so let's hit play. Let's let that. All right, perfect. So we have this candlestick, and this is on the daily time frame. We have this candlestick that's forming, and we wanted to see exactly. Well, so we have this candlestick that's forming right here, and if we wanted to draw our opening and closing prices currently, if it was to stop trading, we would say that our opening price was here at about $22.20. You can see off of this is saying $29.22. So we're relatively close, but we have the opening price at $29.20. And then our closing price, if it was to close, would be here at about, trying to get it as close as I can. at about $29.26. And you can see here the close, the C says $29.26. Then we have our, and again, this is showing us everything that we need up here. So we have our H, which means our highest price that it has gotten to thus far. And you'll see that is at $29.74. And if we try to draw a wick and we try to catch the top of it, it's not going. Let's see if I go in. Okay, and we try to grab the top of. We can see at the very top of where I drawn it's showing me $29.74. So it's relatively close. And if we was to just get this up a little bit more, get that closer. And then if we was to do our lowest price currently, it'll be at about $29.08, $29.10 probably. And so if we was to go back, we'll see. Okay, so they're gonna show me. We can see, oops, I gotta keep it right there. We can see that it's at $29.08 for our lowest price, and that's what we drew here. Now, this candlestick was still moving, so it actually ended up turning red as we saw earlier. So why is that? That's because this price that we have, our closing price that we have at $29.26, that price actually ended up closing even lower than that. So that's what turned this candlestick red, because we remember our opening price was at about $29.22. So because it's decreasing and it's going under, it's going to turn it red. So we was to hit play, and we can just, it'll just stop there. You can see that it closed from our opening price. All right, so our opening price, which I'm not sure why it changed that much, but our opening price was here. Okay, so it was at $29. It was up here at $29.22. And when we closed, we're closing below. And we're closing below there at $28.72. So because it's decreasing in value, that's what's turning this candlestick red. That's what's making this candlestick turn red. Do I have any questions? Perfect, perfect. So what I'm gonna do is I'm gonna pass it back off to Ladarius, and he's gonna go over his picks for the week.
All right, I appreciate that, Mark. All right, I have quite a few that I've been paying attention to, especially with the news of Biden stepping down. So if I'm going too fast, let me know. And the ones that I can't get to, I will post them in the Discord. But I'm going to try to, let's see how much time I got. It is what, 7:17. So I got about 40. I should be okay. But if you all have any stocks that you want us to check out or chart out, just post it in the chat, and then we can take a look at those once I'm done with my picks. Again, I'm gonna try to get these done in about the next 20-30 minutes. So yeah, again, any stocks you've seen news on, you're wondering about, just post it in the chat, and then we'll get to that one afterwards. All right, cool. Let me share my screen. Where are we at? Do screen 2. All right. So first thing I want to look at is Bitcoin. Again, we talked about what's obviously being impacted as far as the markets, which stocks. So I'm going to give you a few quick companies that are related to, or probably give you one that's related, or I can give you 2. We'll look at it. But I'm going to give you some companies that are publicly traded on the normal market, and but they're related to crypto. All right, so the first thing you want to do is look at the king of crypto, which is Bitcoin. And right now, you can see that Bitcoin is making a bull flag as well. Again, if you want to, you're going to hear me talk about bull flags all the time because it's one of the most recognizable patterns you're going to see, and it's one of the easiest to trade. A bull flag, again, is just a strong move up. You can see this at the flagpole, and then the stock is, or the asset is flagging out, right? It's just bouncing up and down between these two price, between the support and resistant lines that I have drawn here. So this is the weekly. This is where I'm looking at Bitcoin at. This is why I'm saying I think that Bitcoin could go 75 to 75K. Right now, let's look at this. Is at 68K, which is doing pretty good. Is up almost $1,000 on the day since the day started. And if we zoom in, we can get a better picture here. So this green candle right here is still building itself out. I think again that we should run into some trouble around 70K. The reason why I'm saying it is because we ran into some trouble here back in May, and then we ran into some trouble again back in March. So it looks like every 2 months or so we're running into trouble right at 70K. But just think about this is chopping a tree down, right? If you keep hacking away at 70K, eventually you're going to break through it, right? So I think that that's what's happening here, is that we just keep knocking on the door at 70K. And I think that this time we could break through. The reason why I'm saying we could break through this time is because if we look at this RSI, the RSI is at 60 and it's pointing up, and it has a lot of space to go up to 70. So it has about 10 more points to hit 70. And you can see that it can over-rev. It can get a little crazy on the RSI. So again, that's what I'm saying. 70K plus up to 75K is realistic. And then also, if we look at the MACD, we can see that the MACD is crossed over to the downside, right? So that means that, again, when red is on top, that means that the selling pressure is being applied to the stock. Well, the blue, I said the stock, the asset, because we're talking about Bitcoin and crypto. This blue, which is the buying pressure, is starting to curve back up. You can see, let me zoom in. See right here at this tail end, it's starting to point back up. And so if Bitcoin goes up to 70, potentially 74, 75K, this MACD is going to be ready to cross over to confirm the uptrend. Also, if we look at the histogram, you can see we have some weakness showing on the histogram bar. So the dark red, it's showing that it is increasing in intensity to the downside. The light red, it's showing that it's starting to loosen up and let up to the upside a little bit. So we got this pink right here that's starting to loosen up to the upside because we're pulling back to the upside. And then eventually we'll go green like this, and then we can make our move to the upside. So we have a lot of potential here. 60 on the RSI, it's pointing up. We're going right up against this resistance, which we rejected a few times before in the past. It looks like every 2 months we get a go at 70K. And then we look at the stochastics. This is a double bottom. So for my pattern people, a double bottom is a pattern that is bullish, which means that it's going to move up. And a double bottom is just a W-shaped pattern. It goes down, it creates the bottom one, it goes up, comes down at bottom two, and now this is ready to go. So now that we're above this 20 line on the stochastics, it looks like this can take us up to 50. And then after we hit this 50, we need to hit 80 and then 100 for a max out on the weekly. So right now, again, with the news of Biden stepping down, you can see that Bitcoin is actually green. So that means that the Bitcoin related stocks should be green as well, because the higher Bitcoin goes, the more valuable the companies that allow you to buy Bitcoin are going to be. All right, so let's look at one of the top companies that allow you to buy Bitcoin, and that's a publicly traded company, Coinbase. So if you're in the Discord, you know that I've been trading Coinbase and talking about Coinbase for like the last week, I want to say. And we've been in and out of Coinbase for a second, but Coinbase is looking good. If you look at and this is on the daily, we're not even looking at the weekly. Well, we're just looked at on Bitcoin with the weekly, but Coinbase on the daily, you can see RSI is at 61. It went up, it cooled off, and it's pushing back up again. We can see that it can over rev as well. It can break 70 and go higher. And then when we look at, I have all of these blue lines, but this shows how much we've been paying attention and trading this stock. But you can see this is making a bull flag as well. What is a bull flag, right? Strong move up. It's flagging out to the right-hand side, and it's testing that high, right? So it's testing this area at about 260. It hit 260, I want to say Friday, and then it pulled back. Since Bitcoin is green and Bitcoin is up, that means that we're going to get a break at 260. So when this opens, we could see it, 263 to 265 on this node on the VRVP. And if we get on this node on the VRVP, this is why I like the VRVP. The VRVP is telling us the buys versus sells. And if we look over here in this area, we can see when I hover over this node right here at about 260 to 270, we can see that the up is slightly more than the down, right? So we got up at 4.2 and down at 4 for a total of 8.2. So that means that once we get onto this node, we're going to see some struggling happening here, but then we could push up and hit this node right here at about was that 276 to 275 before we start to pull back. So I'm thinking that again, as long as, because Bitcoin is leading the pack, as long as Bitcoin stays above about 67.5K, then we could see it moving up. Now, if Bitcoin spikes up to 70, this is going to push this up to about 265 to 270 for a move to take profit. But I think time horizon wise, I think that this is a good stock to hold long term, because Bitcoin and crypto isn't going anywhere. I know a lot of people don't trust it yet. A lot of people don't know where it's going, but it has the same kind of stigma as EVs. People didn't trust EVs at first. EVs started a long time ago. They came to the market. The market wasn't ready. It fell off, and then Tesla brought the EVs back, and then EVs are now, you know, we see EVs every day pretty much. And we actually have charging stations and accommodations for EVs. Same thing is going to happen with crypto. Whether you like it or not, crypto is not going anywhere. And I honestly think that eventually we're going to have a crypto sector added to the S&P 500, because the S&P 5, the people who control the S&P 500 and add the different sectors and balance out the portfolio, crypto is going to be performing so well that they're going to add it as a sector. So you're going to have banking, crypto, energy, consumer product. You're just going to have everything pretty much mixed in. But then I think that crypto is going to be added. And at that time, I think Coinbase, I've been saying I think Coinbase is going to be $1,000 stock. Right now it's at what, 250, 260, give or take. I think it's going to be $1,000 stock. And then if we zoom out some, actually, let me give you a larger time frame to make this even clearer. We zoom out some, look at that. We zoom out, we can see that this isn't anything new. We've been here before, right? And if I zoom out even more, let me reset my chart to make it cleaner. Look at that. So we're scaling back up on this right-hand side. And for my chart people, this is an inverted head and shoulders. And inverted head and shoulders is one of the most successful patterns. I want to say they're at about 80 to 85%. So if you trade head and shoulders or inverted head and shoulders, they're at about 80 to 85 percentile as far as success. Now, does it mean that it's going to happen every single time? No, but I think 80 to 85% on patterns is pretty high. And if you're wondering, okay, what is he talking about? Where is the pattern? An inverted head and shoulders, let me pull this up on Google to show you exactly what it looks like. And I can give you the breakdown. Give me 1 second. Inverted head and shoulders pattern. Boom. Let's go with Investopedia. Cool. Here we are. All right. So this is, or you can call it inverse head and shoulders, inverted head and shoulders, same thing. But this pattern, it has a shoulder here. So it comes down into a shoulder. It goes up. It comes down into a head. So the head has to be lower than that first shoulder. And then it goes back up again and it comes down. So it's a pretty complex pattern, but it's called a head and shoulders because it has one head, shoulder one, shoulder two, and then it breaks out to the upside, right? Let me see if I have another picture of it. Here's another picture of inverted head and shoulders on the actual chart. So again, it's really, let me see if I can zoom in some. It doesn't make it any better, but it has a shoulder here, a head, shoulder there. So let me zoom out. Let me see if I can find any. This is a pretty long article. But yeah, let me show you what it looks like on Coinbase. So Coinbase again, shoulder one. The head is down here. We have a head that's lower than that shoulder. And then we have another shoulder that's forming here. And you have your second shoulder. So the next thing is that we need a break at the neckline The neckline, we could actually call it right here at about 300. I wouldn't. I mean, some people like to call the neckline here at about 330, 335-ish, but I like to be safe and call the neckline here at about 300. So after that break at 300, then we could be going back up 375, 400. So again, if we see Bitcoin at 73, 74, 75K, this is automatically going to be anywhere between $300 to $350. It just moves with Bitcoin. And again, when we look at Bitcoin, Bitcoin is already flagging in a bull pattern formation. And all of the indicators are pretty sweet. So, and then we have, let me see if we have the article here. I want to see, we have Trump. Trump is speaking on crypto. Let me see what day. I have to find the article. I don't want to waste all the time. But again, crypto is moving up. Coinbase is a good stock to watch for crypto. Now, when you look at the price of the stock, I know it's $257, almost $260. You can buy in fractionals. Like, you don't have to spend the whole $250. You can spend $50. You can spend $20. You can spend $100. Whatever you want to spend in fractionals to hop in the stock, because the only thing you're really paying attention to is the percentile gain, right? So, for instance, Friday, this moved up 10%. If you would have put $100 into this stock Friday, you would be at 110. You will still get the same percentile gain, regardless of the amount that you put into the stock. So I just want everyone to remember that. I know it's a pretty expensive stock, but what you're after is actually the percentage gain, right? Because think about it. When is the next time the bank is going to give you 10% on your money? And this is 10% that happened in one day. The bank will never give you 10% in one day, ever. The bank may not give you 10% in 10 years, in 20 years, 30 years. The bank is taking money and giving you a small percent, which you're actually losing money. And then you have inflation and all the other stuff. But this is one to pay attention to. If you're looking for a cheaper stock altogether, you can look at Marathon Digital or Mara. Mara is $24. Mara could be going $30 to $40. I think at one point, yeah, Mara's up here in the 70s, almost $80. Actually a little bit higher than 80. But right now, Mara, $24, is not moving as much as Coinbase, because Coinbase, again, is a platform to where you can buy and sell crypto of all sorts and kinds and types. Mara is a crypto mining company. They pretty much buy equipment to mine and hold Bitcoin. So if you don't understand that, you may have to do a little bit of research, but Marathon is a good entry into the crypto market as well. If you don't want to buy direct crypto and you still want protections of the normal market. So this one moved up 4.5% on Friday, which is still nice, especially for a $24 stock. So there is opportunities with these different stocks to jump in. And then again, you have the dynamic of Trump speaking, regardless if you like him or not. He is speaking and he's saying that he's going to be doing great things for crypto. Whether he's doing them or not, just the rumors could push crypto up like they have been. Someone had a question. Jimmy?
Yes, I have a question, and I don't mean to stop the flow or continuity, but
Oh, no, you're good.
I do not understand crypto. It's like well, it's not even a foreign language, because you can break foreign languages down to whether they're Romance, whether they're Slavic or whatever, but I do not understand crypto at all.
Okay. So like you don't understand what's the whole thing about it, right?
Correct.
Okay, so I can give you a quick like 2-minute answer. But then we can also move it over into the Discord and do a deeper dive on what it is and how it works.
Okay.
Bitcoin.
Right. I mean, it's totally up to you. It's totally up to the
Oh, no.
the course, the class.
No, I got you. I can give you a small crash course. So Bitcoin as a cryptocurrency was used on I would say the dark web. The dark web, for those that don't know, is like an underground internet, pretty much, without going into too many details. And with that, people like to use Bitcoin for those transactions like with, buying stuff on the underground web. You can buy drugs, you can buy, whatever.
Yeah, I know. Yeah, I
Yeah,
got
whatever you
it.
wanted to buy. But the reason that they use Bitcoin was because it was hard to trace it back to the source, right? It's cryptic currency. So it's hard to trace it back to the source, which is why a lot of people decided to use that when they're doing, illicit activities, right? So now with all the hacks, all of the data leaks, all of this stuff happening, people are in the, that are not in the underground world are using crypto to again protect themselves from that type of information. So I mean, from those type of attacks. So now people are really locked into the blockchain. The blockchain is really the thing that people are buying into, and the blockchain provides a certain level of security that we haven't seen when it comes to financial transactions. And again, it started from people doing illegal things, Silk Road and all these other different places. But now people are finding greater uses for it, and so now it's not going anywhere because it's way more secure than the normal financial transactions that we've been processing. Does that kind of give you an idea why people like it, Jimmy?
Uh,
That's the tip of the iceberg.
when,
But
when you started talking about uh, the dark web and all that, it's like, wow, okay.
yeah, it's protect. It's a secretive way to transfer money, pretty much, and to keep things. People decided to use it for that. Ty, you have a question?
Yes. So your sort of price target of 1,000 on Coinbase, what's the timeline on that, and what's the road to getting there? Because my sense of crypto is that, like BTC, when it hits an all-time high, it often enters a winter. Am I wrong in that?
Nope, that's right.
So, and Coinbase tends to trade in tandem with BTC, because whenever there's a crypto winter, there's less traders, right? Less people wanting to trade it.
Yeah.
So yeah, so how do you like your thesis? Like, how do you play that out? Because from
Yeah.
where that's a 4-time move, right? That's a 4x move.
Yeah. So I would give it 3 years to hit $1,000. Honestly, it could happen sooner. The reason why I picked that price target is because right now we're in the early stages of crypto, right? A lot of people, like Jimmy just said, he don't understand the star behind it. He don't understand why people want it. The thing is that you have a lot of like a lot of big financial entities. I won't even say banks, but entities that are buying up crypto right now. A few years ago, they said, "Oh, crypto is a scam. Don't touch it." Blah blah blah. But now we have these ETFs that are approved by these companies, Vanguard, all of the Fidelity. Once you have Fidelity allowing you to buy crypto, that should tell you something, right? So with the large I would say adoption across the board when it comes to the big dogs in the financial world, that's going to skyrocket this. So it's already at 250, 260, and people still don't really know what crypto is. Once crypto becomes normalized in our daily transactional processes, as far as like again ledgers and the blockchain and things like that, this is going to keep going and it's going to get higher and higher and higher. Up. Ty just left. I think she disconnected. Jimmy?
Okay, so if somebody comes in office, then the crypto could become the world economy, the one world economy, or currency rather. I'm sorry.
Potentially. Yeah, good.
Yeah. Okay.
It could
Yeah.
potentially.
Okay.
I'm not going to say it is because you're going to have countries that say no, right? I don't think everyone's just going to say, all right, yeah, Bitcoin is perfect because there's thousands of other crypto, right? It's not just Bitcoin. So like each country could make their own crypto, just like how each country has their own currency, euros, yens, all of those different types of currency that they have out there, right? But they can make their own cryptocurrency to say, okay, this is where we're going to, trade in, and this is going to, just the same way you would look at Forex. But I don't think it's going to be like a one world, everybody needs Bitcoin. Bitcoin is the gold standard. I don't think that's going to happen. But I think that people could copy the way that Bitcoin functions and works, and the dynamic of it to repeat it for their country. That could be a possibility. Don't know yet. Again, we're in the beginning. And I think that anytime we're in the beginning of things like this, the people who jump in early is like the early investors in Tesla, millionaires now, right? And crypto isn't going anywhere. And we have companies that are publicly traded. The SEC have already probed them and processed them and allowed us to buy the company stock. So again, we're getting more into that. But yeah, again, we can carry the conversation offline. But yeah, Coinbase, Mara, just lock in, pay attention. Even if you don't buy it, just watch it. Just watch to see what happens with check the company here and there.
Okay, thanks. Sorry to take everybody's time.
No, you're good. I'm pretty sure other people had questions about it as well. So no, I think that was good. All right. Energy stocks. So First Solar is one of the I would say best solar panel companies on the market, in my opinion. And it was just at $300. Now it is at what is that? $216. I'm thinking that this could go back down to this level here. Where is it at? Around 210 to 190, pretty much. I know that says 187, but I'm thinking 210 to 187 is where we could find this. The reason why I'm saying that is because we have this 20 MA that crossed under the 50. So anytime we have this 20 MA cross under the 50, again, that's not a good thing, and we can have the stock continue to drop. Now, what I'm waiting for here is to see what happens on this earnings. So it has earnings here on the 30th of July. I want to see what happens and what they have to say. If they have great things to say, I think the stock could bounce back up to about 230 from what 216. We could see about 230, 240 before pulling back. But I think right now with Biden stepping down, and we don't know who's going to be the next. He endorsed Harris, and we don't know. Things haven't. It just came out today, so we don't know too much. But if Trump wins, then energy stocks we could see a pullback in energy stocks, or renewable energy stocks. So this is why I'm watching First Solar. I'm also watching Enphase Energy. So where I would like this stock for me to buy in some more would probably be right around this 190 area. So if I can get this at 190 to 170 to 190 would be a nice area to buy. But I do think that this could keep pulling back to about 200 to 190, depending on what happens with earnings. So that's why I have this one on my watch list. Again, I'm not convicted to buy it, but I am watching to see what's going to happen with earnings, because I think Biden stepping down, we don't know, let's say if Harris wins instead of, Trump winning. If Harris wins, is she going to push renewable energy the same way that Biden did? Nobody knows at this point. So these are the stocks that I'm watching. Again, crypto, and I'm watching energy. So you can watch First Solar. I just gave you my levels for the pullback. You can also watch Enphase Energy is another one that has been consolidating for months. But this is December of 23 has been consolidating. And I think that at this point right here, so at about $98, if it breaks this $98, this is why I like the VRVP. If it breaks this right here, this level at 98, it could drop down into this gap and go all the way back down here to 77. So there's a gap in let me pull up my data window. There's a gap right here in volume. So there's extremely low volume in this area, just even total volume, right? If you look in this area, we got anywhere between high sevens to 8, 9, 10 million volume in this area. As soon as it drops under this 97, we're going to 2 million, 1.6, 200K, 500, so it's starting to get lower and lower and lower. So people are losing interest. But I think that these companies, buying a stock at 77 and selling it back at 100, that's an easy, nice flip to get. So that's what I'm waiting to see. But right now, you can see that the stock has been selling off. I think that currently it is at 105. We could see it down to about $96, $97. And then it'll start to consolidate. And then I want to see it bounce back up to about 107. But if not, if it falls down here, I would watch anything below 95. After 95, we could drop all the way to 78. Another thing is that they have earnings Tuesday. So this is going to happen fast. We're going to see it either, and then this one is dangerous because it's making a bear flag. So this whole time I've been talking about bull flags, right? A bull flag is what? A strong move up, consolidation to the side, and then a move higher. This is doing the exact opposite. This is a strong move down, consolidation, and it can move down again. So again, if it breaks this 98, it can flush all the way down here to 77. So it's already in a bear flag formation. Again, strong move down, bounce up, and then get ready to bounce and test this again, break through, and just flush all the way down here. So be careful with energy if you're already in energy stocks. But I think there could be an opportunity if the energy stocks pull back by a large percentage. I'm looking at 10, maybe 15% on a crazy pullback. That would be a nice buy. So when they do recover, easy swing trade. All right, let's keep it moving. So we had an outage, over the weekend or Thursday, Friday, somewhere. In the last few days, we've had an outage. And I think that cybersecurity companies are now on tap. Cybersecurity companies are now the companies to pay attention to. And I think that PANW, Palo Alto Networks, is a good one to pay attention to for multiple reasons. The biggest reason is that Nancy Pelosi is buying this one. She's been buying it for a while. It dropped out of the sky. It was at about 370. Let me zoom in. It was at about 370, 380 back here, and it just crashed all the way down to about 262. This is what I mean. When you find companies that crash like this is a good time to buy and hold, especially if you know that they can come back, right? So this crashed all the way down to 260. Today, it is at 330. Really easy, nice swing trade back to the upside. And honestly, I think that once it breaks here at about 340, we'll be going back up to 360 and then 380 again. The reason why it's getting stuck here is because look at what happened back in January, February of this year. A lot of consolidation, a lot of chop. It bounced up, went higher, and then it came crashing down because of this earnings right here. This is the earnings that it crashed down on. Then it started to climb its way back up. It had an earnings here where it did well, kept moving, and now it has earnings again, but this is all the way in September. So right now, with CrowdStrike as a competitor and CrowdStrike pretty much dropping the ball, people are slowly going to start to move business to their competitors. One of their largest competitors is Palo Alto Networks. And again, Nancy Pelosi is behind this one. So that can kind of give you an idea of what's going on. If she gets behind it, she's not just putting millions of dollars behind this stock for no reason. Just pay attention. But I think that Palo Alto Networks right now is in a decent spot. What I would like to do is buy it at 320. I think that 320 would be a perfect entry for me. Let me show you right here. And if it breaks this 340 to 342, the entry that I would be looking for is about 348 to 350. If it gets above 348 to 350, I can lock in there and take it up to about 365 to 380 for an easy, nice swing trade. When you look at it, the RSI is decent. Is that it has a 52 RSI. When you look at the MACD is crossed to the downside, but it's not that far off to the downside. There's room for it to come back. And then we check out the stochastics. It is at 8. This could go down to 0. That's fine. Again, if this goes down to 0, that could take it down from 330 to 320 to where I would like to have it. And then I can just wait for it to go all the way back up to 100, which will put the stock at about 360 to 380 anyway. So this is another good one. So I was talking about this on my Instagram, is that you want to make a play off of chaos. I know it sounds crazy. It may sound a little twisted, but that's how a lot of people make money in the market. When everything is green and going well, everybody can't make money. But when you have situations like this to where things are breaking, things are falling apart, chaos is created, this is where you start to look at, okay, what companies are being impacted and where can I buy something on sale? Warren Buffett will always say, buy when there is blood in the street. And what he means by blood in the street, he means that on Wall Street, where there's blood, where there's a whole bunch of red, that's where you come, you take your shopping cart and you start putting things in the bag. So when everything goes green, you got a great deal. You don't want to buy when everything is green and everything is going well, because eventually that stuff is going to fall out the sky eventually, right? You want to buy in times like this where there's chaos. There's, people think, hey, the world is going to be over. It's not. But people are going to sell just because. You buy in, you wait, you're patient, you make your money, you get out. Easiest way to make money. Do I have any questions so far? Let me see where we at. Ty.
Do you think, because there's a lot of people buying CrowdStrike because they see the price having, moved over like 10%. So they're placing their bets instead of on Palo Alto, they're buying the dip on CrowdStrike. So what do you think about that? And then can we look, if you have time, NVIDIA, AMD, and Micron?
Yeah, so this is the last one. I'm going to save Airbnb and Meta for the Discord. But my thoughts on CrowdStrike is that, yeah, you could buy it right now. The only dangerous part about buying it right now is that the situation is so new that they could come out with some more information, right? Because people are now want to know, like, how did this happen? Did we get the full story? Did you notify us early enough that there was an issue? Like, who dropped the ball, when, and where? I think once that information comes out, then I'll be willing to make a move. But if you want to buy it at these levels, it could drop a little bit lower. But again, that just comes down to risk management, how you want to manage your risk, and then again, how long you're willing to hold it. If you buy it now and it drops lower, are you buying more? Are you selling? So on and so forth. But for me, I don't have enough information on who dropped the ball, where, how, and what was it about. If it's, if it comes out that it was a cyber attack when they said that it wasn't, the stock is going to go down even more because they lied, right? So I just need to I need more information before I make that decision. But that's just my stance on it. But I know a lot of people are buying it because it's low right now. Does that help, Ty? Just give you.
Yes, thank you.
No problem. All right, cool. If I don't have any other questions on the stocks that I've covered, again, this is what I'm watching for the week. I'm also watching Airbnb real quick because it has been consolidating. Also, Airbnb has earnings on Wednesday, the 31st. And then Airbnb is coming off of this is like a summer quarter for it. So I think that Airbnb, their earnings could be nice, especially since it's been consolidating. Now, if they drop the ball here, there could be an opportunity to buy the dip on Airbnb, but Airbnb has been around 140 to 160 for months. So this is the one I have my eye on and that I'm watching. I'm also watching Meta because when it comes to anything political, how did we get the information? How do we know that there was a assassination attempt on Trump? How do we know that Biden was stepping down? Did you see it on TV? Did you see it on television? No, you saw it on social media. So I think that Meta having 3-4 billion users, worldwide, I think that Meta at some point is going to see a surge. And I still think Meta is a $600-$700 stock. So Meta is another one that I'm watching because this is where everyone is getting their information. And anytime there's a shift or change in dynamic when it comes to the US, everybody's hopping on social media to see what their favorite celebrities are saying, what the politicians are saying. Everybody is going to social media, and Meta pretty much has a monopoly on it. They own WhatsApp, Instagram, Facebook, you name it. So I will pay attention to them as well. But all right, I'm going to pass it back over to Mark, and then he's going to cover. It looks like we have NVIDIA, AMD, and Micron in the chat, so he's going to break those down for you, Ty, and then we can wrap it up. And if anyone has any questions about the Discord or about joining the Discord, stay a little bit afterwards. I can give you a demo, but we do have a lot of upgrades coming. I'm like 50% of the way when it comes to Chat GPT integration with the Discord, but we have a lot of other integrations that we've been working on. Again, once this recording is over, if you follow us on YouTube or subscribe to our YouTube channel, this will be shot to YouTube. If you're inside of the Discord, it will also be posted in the Discord as well. So you can find the video there. But all right, I'm going to go ahead and pass it back over to Mark, and I appreciate y'all.
Appreciate it, Ladarius. So I'm gonna share my screen. All right. All right, so here's NVIDIA. So remember we talked a little while ago. Remember we said that this was their high. They was hitting all-time highs and they needed to cool down. Looks like they've been pulling back. And we said these were the levels that they can potentially pull back to. We see that they broke past the 122 level. And now they broke below our 120 level, and now they're testing our 115, which is also our 50-day moving average. So they're doing exactly what we said they were going to do. If they were going to be pulling back, they're testing those levels. They're currently testing our 50-day moving average. So we need to see if they can break below that. If they break below our 50-day moving average, we're going to start to see them get closer and closer to this 100-day moving average. But before that, they're going to come and try to test 110. So I chose 110 just because we had price action at this level at 110. So if they were to continue to pull back and cool down, we could be seeing them get to 110. Now, if it's looking like from the chart on the daily, we may have a green week because of where the stochastic RSI level is in that oversold region, sitting at 6.37, which is basically at 0. So it's really close to that oversold region, and it looks like it needs to start to recreate. It's probably going to try to reject this 50-day moving average. It had 3 touches on this 50-day moving average. So if we was to see that price rejection, we can be seeing this get back to this 122, 123 range. And then from there, I want to see what happens. If it breaks above that, that's going to be really close to our 20-day moving average. So if it breaks above that, we could be seeing this try to get back to the 130s. So we just need to wait till the market opens up and see what happens. Now, again, if it was to pull back, we're going to be seeing it get to about 110. If it was to break below our 50-day moving average, and if it was to break above our resistance at 122, we would be seeing it get to about 130. That's what we would be seeing it. It's looking like it needs to. It's looking like it'll probably find its bottom here and start to trend back upwards just because of where that stochastic is at. We do have some separation on that MACD. So before if I was waiting to get into a trade, I would be waiting for for the blue line, my buying pressure, to start to point upwards and try to get closer to crossing over that selling pressure. So I want to see that happen before I'll get into a trade. For a pattern, it's 2 things this could be. This could be a bearish flag, or it could be a double bottom. I'll show you the double bottom I'm seeing. So we have price went down, it came up, it's pulling back, rejecting. So now the next thing that we want to see for this double bottom is for the price to break above our resistance we have at 122. And if it breaks above that again, that's how we'll be potentially seeing it get to back to this 130 range. And then from there, once it gets to 130, we'll have to reanalyze this stock or reanalyze NVIDIA and see if it can break above that resistance level. Does that help, Ty? Have any questions about it?
Yeah, it's good. So you're thinking the chart is showing bullishness for the week.
Yes, potentially, yeah. So just wait for Monday if it's opening up, it'll be bullish if the price breaks above, and we can have it break above and stay above this 122 range. If we can see it stay above 122, it'll probably be bullish for the week. So this could be a potential double bottom. It'll just have to break that neckline area of 122. If it doesn't break that neckline area, then this is looking like a bearish flag. And if it breaks below this 115 range, then we'll be seeing it get to 110. But it's looking like from where the stochastic is at, it's looking like it's probably going to start to turn around. And in this area of the RSI, we can see the 50 level is being treated as this sold region at the moment because of where the stochastic RSI level is at. So this is setting up to the bottom of the RSI level. Yeah. So if it opens up above 122, we're going to be seeing this green. That's what I see.
Thank you.
All right. And then let's look at AMD. All right. So AMD is broke below this resistance we had, support we had. It's broken below that support level. It's testing this 200-day moving average. So at this point, I want to see what happens, right? I'm not necessarily going to get into a trade just yet with AMD. It is at the bottom, but this could go lower. We just had a MACD crossover to the downside, and we know when we see that crossover to the downside, even with the stochastic RSI level being where it's at, we can see it stay under there for quite a while, right? We had it here. We see a crossover happen to the downside of the MACD, and look how long that stochastic stood below that level. A lot of times when you see a crossover to the downside or the upside, it'll trend in that area for a little while. So I would just be a little bit careful on that. If it was to continue to go down, the next level of support we have is, let's see, so we have support here, and then our next level of support would be at about 140. So about $10 from its current price, 140 is a good level of support because we see we have testing in this area, and even when it broke back above it, it broke back above it, and it still tried to come back to this level. I would be a little bit careful because it could be in a potential downtrend. These moving averages are getting closer and closer to crossing underneath the 200-day. And when you see the other moving averages cross below the 200-day, that's signifying a strong bearish trend. So just be a little bit careful because they are getting closer and closer. So I would be just a little bit careful with that, especially if you're trying to get into a trade. If you're looking for a setup, just be a little bit patient and just keep watching the chart. And this is on the daily. So we could be seeing, we may see more red days on the daily. If we was to see a increase in the stock, I'm thinking it's gonna maybe try to get back to 170, but before it gets to 170, it's gonna try to test this 50-day moving average, my blue line, which is sitting at about 152. Excuse me, 150, 165, 164, 165 is going to be where it's going to try to come and test if it was to trend upwards. Because we have a lot of activity in this space, and then that's a moving average. So anytime you have a moving average, you want to treat it. You want to treat that moving average as like support or resistance. But this chart is showing me is looking really bearish just because the RSI level is pointing downwards. We have this stochastic RSI level pointing downwards, and then we just had that crossover of the MACD to the downside. And going into it, we're testing that 200-day moving average. So if it was to break below that 200-day moving average, that's another indication that this is bearish. And it is it's slightly below that 200-day moving average. So just be a little bit careful with this one. If it was to pull back, we're going to go and see it try to test this 140 range. And that's on the daily. Let's look at the weekly real quickly and see. The weekly, see how this little decrease. Yeah, just be a little bit careful on it. Same thing, the moving average is a little bit below, a little bit above our resistance level on the one day or the daily chart. So 144 may be where we can see this get to before it starts to try to reject and turn around. It's really close on the weekly to a MACD crossover to the upside, but it did reject that crossover, and it does have that momentum pushing downwards to continue to go down. So yeah, be a little bit careful with this one.
Thank you.
And then we have Micron. MU. All right. So looking at Micron or MU on the daily chart, stochastic RSI level is really low. The RSI level is really low, pointing downwards. We have the MACD is pointing downwards, buying pressure, has a little separation on the selling pressure. We can see that it just broke our 100-day moving average, so it may reject this area and try to trend upwards. This does look like a nice spot for support at about 114, 115. Nice little area of support we can see here. We have tests in this area. If it was to break below that, we're going to see it try to get to around this level. So about 100 is going to be the next level it can potentially get to. Or well, before it gets there, we'll probably see it try to test 106 because we have these tests in this area. So it could be trying to get to 106, and then the major support will be 109, which is also the 200-day moving average. Looking at the stochastic RSI level, it's looking like it's starting to, it's starting to cool down significantly. We may start to see this turn around. So we just want to see if it's going to reject these moving averages. I'm thinking it's probably going to open up red on the day, Monday, and try to trend towards this 107. If it doesn't, and it tries to break above again, we want to keep it real tight. Our resistance level will be 119. I will want to see what happens at 119. Can we break above 119? If we break above 119, then we'll be seeing this get to about 130. But it needs to break above this 120, 119, 120 range before it can get to 130. So that's what I'm seeing here. So I wouldn't be getting into a trade until after it breaks above 119, and I can confirm that it's going to go up. And then that's when I'll get into my trades, and I'll be looking at 130 as my target prices for those trades, those swing trades or option plays. And let's look at the weekly real quickly. All right, weekly. Yeah, crossover to the downside just happened. Stochastic RSI level is getting close to being oversold, but again, that crossover to the downside, a lot of times it keeps that RSI level low, that stochastic RSI level low, and we have the regular RSI pointing downwards, and it's at 53. So this still has little room to continue to go down. It hasn't hit oversold in quite a while. It hasn't hit this 30 range in quite a while. So it's been treating 50 as its oversold range. So this could be, we still have a little bit more room for it to get down. It looks like this could be a potential rising wedge, or it could be a potential head and shoulders pattern forming. We have the first head here, we have the head here, the first shoulder, and then we'll potentially seeing this get to 130, but we'll have to see on that just to see if that happens. But just be a little bit careful because this could still be cooling down, and we could be seeing this get to 107. So I'll just be a little bit careful with that one as well. Does that help out, Kai? You have any questions?
Do you see it going back to 40 at any point? 140, 145?
41, 45. Potentially, we would have to potentially. I would need this to first turn around. I want to see that turn around first, because that's the way that it's set up with this MACD crossover to the downside. I want to see it reject. It'll need to reject this area first. It would need to reject 114 and start to trend upwards before I can feel confident that it's going to get back to 145. Yeah.
Okay.
Now news may cause it to spike. News may cause it to turn around, but just looking purely at the technicals, I would be a little bit careful on if it's going to get to 145 anytime soon. Just because this is looking like a head and shoulder, so I'm thinking the peak is going to be like 130. 130 may be the peak, and then from there we may see it start to trend down again. So we may have an increase to 130, and then from there it could potentially start to pull back down. So just be a little bit careful.
Thank you.
All right. It is 8:07. I appreciate y'all. If you're in the Discord, just drop your charts in there, and then I'll be able to do the analysis. And I will also be posting my Calendly link as well for you all, so that you can set up one-on-ones with me. Thank you all, and I'm gonna pass it back off to Ladarius.
All right, appreciate that, Mark. Let me stop this recording. And again, this is going